Hello friends, I welcome all of you to joining me in this session. And this session we will discuss about the computation of income from house property. Along with this, we will also discuss about the various situation under which what should be the gross annual value of the property, and so much of interesting topic during the sessions. So without wasting any time, let's discuss this topic and finish it. So today's session we will cover first of all the introduction of income from house property. Then we will discuss exemption of the income from house property, in which we will discuss about the what are those income which earned from the house property but will not be part of the income from house property. Then we will discuss about the component of income from house property computations, what are the terms and what are the components, amounts, and what type of rent we will include while make computation of income from house property. And here you will see the structure to overall structure of the income from house property. Then deduction from the income from house property, there are two type of deduction. We will discuss about the standard deduction as well as the interest on borrowed capital. Computation of income under different scenarios, so there are around 5 different scenarios under which income from house property shall be computed. Then provision of unrealized rent, what are the condition when a person can say that it is an unrealized rent, and the negative annual value, what are those circumstances under which annual value can be negative. So these things we will discuss in this topic. Friends, topic number 1, introduction. So any income which received from any building or a land apartment is considered as income from house property for a particular person who is the owner of that property. So ownership must be there. Okay, then a person does not use that property for business and profession. It means if any property which is partly used for business and profession and portion is used for residential purpose or a let out purpose, so the portion which is giving for let out, that will be a part, that the income from that let out portion shall be a income from house property, not a income from business and profession. Second thing, the base thing to compute the income from house property is its annual value, gross annual value, and then there are few taxes which is paid to the local authority also consider to calculate the net value as well. Okay, provision of income tax is defined from section 22 to 27, in which we will see the procedure of the gross annual value, how we compute the gross annual value, the net value, what type of municipal taxes we will consider, this we will discuss. Then in standard deduction, which is defined in section 24 and section 25a, we will discuss the unrealized rent, what is the treatment of unrealized rent in the income from the house property. These type of things are covered from section 22 to section 27. And in overall picture, if I talk about, so income from house property is gross annual value minus permissible deduction, in which we include the standard deductions, interest borrowed on capital for construction acquire a house property, and the municipal taxes. If we 3 component or unrealized gain, we will deduct these 4 components from the gross annual value, so we will receive the income from house property. So this is the introduction. Topic number 1.1, essential conditions for computation of tax on income from house property. So three essential components. First is building and land apartment, means property should be a building or land apartment. It should not be a vacated land. Here we will see that all type of property shall not be taxable into the income from house property. Only the building and the land apartment which is used for residential or commercial purpose shall be a part of income from house property. Then ownership structure, if we are talking about, so SC must be owner of the property. It means that there are some special circumstances, like if it is a mortgage property, so mortgage of the property shall be considered as a owner. If it is property owned by the association of persons, so the association of person shall be owner of such a house property, not a member. If property is owned by the partnership firm, so the member shall not be a owner in that case. And if under a will a life interest of the deceased person is given to a special legatee, so the legatee shall be liable to tax under the income from house property. So these things we have to keep in mind. But there are some cases where you can see we will consider the deemed ownership. So what are those cases? Suppose there is a transfer of house property to the spouse without adequate consideration. So there shall be a person who is a real owner of that property before transfer shall be a deemed owner. Same for transfer to minor child, but it is not applicable for the minor married daughter. If any transfer of property to the married minor daughter, in that case it will not cover into the income from the SSE. Okay. Then holder of impartial state, in which if suppose holder of impartial state shall be the individual owner for all properties which he has under that state. Okay. And here the impartial state are those properties which cannot be legally divisible. Okay. These things is applicable in Mitakshar law. As we know, there are two laws, Daya Bhag law and Mitakshar law. So this law is in Mitakshar law. Okay. Basically this impartial state for the our old rulers before independent, they have so many of places states. After the pass of Hindu succession acts, all the existence of the impartiality has been gone. So this is related to that topic. Member of cooperative society. Okay. If a member of cooperative society or a company or other association person to whom this building is relates, means if any member received any building or a building or a part thereof under a housing building scheme from the society or cooperative society or the company, so shall be deemed owner of that building. Okay. Possession of property here means a person who is allowed to take or retain possession of any building without ownership by part performance of contract, which is defined under section 53 of the Transfer of Property Act 1882, shall be deemed owner of that property. In case of disputed ownership, so a person who is a title of property ownership under a dispute in court, and the decision who will be the owner of chargeable income tax will be of the income tax department till court give the decision on it. Okay. So if overall say, we can say that if the title of the ownership of a person who has a title of the ownership at the time of dispute shall be the owner. Okay. Then use of the property. First of all, this property is giving for rent for residential purpose. Okay. If suppose this house property are kept as stock and trade, mostly in the case of builders, so all this unrented flats or unsold flats shall be a part of income from house property. Okay. Then a portion of house property used for business or profession, as I already mentioned, shall not be a part of income from house property. Now topic number 2, we will discuss exemption of the income from house property. So what are those income from the house property which shall not be a part of income from house property taxable purpose? So an income from the farmhouse, which is basically a part of any agricultural land, so this will consider under the agriculture income. Annual value of any palace of ex ruler, if suppose ex ruler have a so much two and more than two palace, in that case only one palace he will consider as a nil annual value. Okay. Income from house property to the local authority for legal and charitable administration, it shall be excluded from the computation of tax. Then university, educational institution, political parties, institution for development of khadi and village industry, as well as khadi and village boards, any registered trade unions, any cooperative society, statutory corporation for promoting the interest of SC and ST, scheduled caste and scheduled tribe. In that case, if they have any income from the house property, so that shall not be a part of their taxable income. Okay. Topic number 3, what are the main components to compute the income from house property? So first of all, I have given a summary here. So first step, we will compute the gross annual value. So what is the gross annual value? So gross annual value, there is under different situation is different, but the component of gross annual value is rent received or receivable during the year. Fair value of rent means fair value of rent of the similar house property who is near to that building for which we are calculate the house property. Then standard rent, any rent which is defined, any rent which is decided under the Rent Control Act. Municipal value, any municipal value of that property uh, based on the local authority. Okay. Then municipal taxes or any other tax paid to the local authority, that is also a part of deduction. Unrealized rent, any rent which is not received or receivable by the owner from the tenant during the year. Then standard deduction, 30% of the net annual value. And then interest paid on borrowed capital for acquire and construction, there are different situations, 30,000 and 2 lakh rupees we will discuss. After consider all this component, we will come to the final conclusion, which is income from house property. Topic number 4, deduction for income from house property. First of all, standard deduction. It is available basically on the net annual value. So what is net annual value? Net annual value is the gross annual value minus municipal taxes or any taxes paid to the local authorities. Okay, it is mandatory to avail for all the assessors. Then interest on borrowed capital. So any amount of interest which is payable or paid yearly basis shall be a part of reduction, but there is a limit that how much we can avail. And then borrowed capital must, first of all, the borrowed capital must be used for the construction, acquisition, repair or renewal purpose, not for trade purpose, not for business purpose. Okay. Interest on loan taken from any person, means any interest on borrowed capital taken from any person, financial institution or a bank shall be allowed as a deduction. But if you want to get the deduction under ATC for the repayment of the principal portion of such loan, so you must have to take a loan from the financial institution and the bank or a bank. Okay. Now here is the limit. If construction or acquisition is complete within 5 years, okay, from the loan taken, capital borrowed from the market in the year, shall be 2 lakh rupees. For repair and renewal purpose of property, it is maximum 30,000 rupees. And if interest is related to prior period for construction or acquisition of property, so it shall be divided into a 5 equal installment and taken as a deduction for a next 5 years. Suppose you have you have borrowed capital on 2016, okay, and your construction will complete in 2021. So whatever the interest charged from 2016 to 2021, you will divide it into 5 parts, and each 1/5 of part of that total interest you can claim for next 5 years. So this is the procedure. Topic number 5, computation of income, different scenarios. So there are around 5 different type of scenario in which the calculation of income from house property shall be made. First condition is that let out and vacant during the whole or part of the year. It means that the house property is vacated for suppose a few months and vacated for a few months. Then second is partially let out in a year and partially self-occupied in a year. Means suppose 4 months it is occupied is by the owner, and then remaining 8 months it is higher on rent. Then self-occupied for residential purpose, or it is self-occupied property is vacated due to employment at another place outside that place where he has a actual house. Okay. Fourth condition, when house property is held as a stock in trade, mostly in the case of the builders or a person who deal in rent house property. Okay. Then let out. If fifth condition, if the house property is let out throughout the year, it is not self-acquired by him. So these are the 5 conditions we will discuss in detail. Now the situation number 1, let out and vacant during whole or part of the year. If suppose there is a house property which is let out but vacant, so condition 1, vacant for the part of the year. So if whatever the actual rent received is more than the expected rent, so in that case the actual rent shall be the gross annual value. If it is vacant for whole or part of the year, in front condition it is vacant only for the part of the year, but here it is vacant for whole or any part of year, but the actual rent is less due to vacancy. In that case actual rent shall be the gross annual value. So expected rent we will discuss in our topic number 5.5 in detail. Okay, so meanwhile you just keep in mind. Then after gross annual value you will calculate the what are the taxes paid by the owner, not a tenant, and that all taxes must be paid during the year, previous year, for which we are compute the income. After that we will deduct that such taxes to pay to the local authority to the from the gross annual value. So this is our condition number 1. Condition number 2, partially let out in a year, partially self-occupied. So here you can see the first of all what is the expected rent. So expected rent is nothing but a municipal value or fair rent value, whichever is higher, but that value, higher value, shall not be exceed the standard rent. If it is exceed the standard rent, so standard rent shall be the reasonable expected rent. Okay, or actual rent received or receivable during the period property let out. Means if suppose a property is let out for 5 months, so we will consider the actual rent receivable is for 5 months. If it is actual rent received or receivable is more than the reasonable expected rent, then it shall be the gross annual value. Otherwise reasonable expected rent shall be the gross annual value. Same, then taxes paid by the owner as during the year, that will be a deduction, allow as a deduction from the gross annual value, so we will receive the net annual value. So this is situation number 2. For situation number 3 and 4, where we will discuss the if suppose a property is self-occupied or a property held as a stock in trade. So or a person who is as that property is vacated due to employment outside that location. So in that case, what should be the value? Value shall be nil. What are those conditions? First of all, that self-acquired property shall not be let out during the year, and 2 house property can be considered as self-occupied property. It is recently amended. Earlier it was 1 house property. So these conditions is applicable for self-occupied or vacant property due to employment at other place. If a person suppose have a house more than house properties which are held as a stock in trade, so for mainly for the builders, if they have so many of flat which is unsold and they are vacated during 2 years from the financial year in which they received the completion certificate from the certifying authorities, so in that case value shall be nil. And same thing, taxes paid to local authority by the owner as well during the previous year shall be a part of deduction, and to compute a net value, that will be deducted. Situation number 5, let out throughout the year, means a property who is let out during the 12 month. So in that case, expected rent same, municipal value, fair rent value, whichever is higher, but limited to standard rent. If it is standard rent is more than the municipal value or fair rent value, so in that case we will consider the standard rent. Then actual rent received or receivable, whichever is higher from 1 or 2, that will be a gross annual value. Then we will deduct all the taxes paid by the owner during the financial years, so that will be our net annual value is gross annual value minus tax paid to local authorities. Very simple, not a hard and fast rule. So guys, we have discussed the 5 different scenarios under which how do we calculate the annual value of the house property. After that, compute the annual value, we will deduct the standard deduction, which is 30%, and then if you have taken a loan from such house properties, so that will be a part of your deduction. So this is up to a. Now in this topic we will discuss about the provision of unrealized rent and what are the circumstances under which annual value can be negative. So unrealized rent is the portion of that rent which is not received or receivable by the owner, and there are some rules also. So what are these rules? So there are 5 rules. First of all, tenant shall be bona fide, means it should be a genuine. Then this tenant who does not pay the rent to the owner vacated that premises in which he is residing, or and owner compel him to vacate that property. Then third condition is that such tenant shall not acquire any other property and occupied any property of the same owner. All the legal steps has been taken by the owner to recover that unrealized rent, and he must have to satisfy if any query asked by the assistant officer that he has take all the reasonable step to recover the rent, but all are useless, so in that case that unrealized can be deducted from the annual value of the house property. Now few things we will discuss. If suppose any interest on borrowed capital which is taken or which is payable outside India shall not be a part of deduction of the interest on borrowed capital, but yes, if we deduct any TDS on that income on that interest, so then it will be a part of deduction. Any unrealized rent received or area rent received later, so in which it is received, it would be a part of our income from house property under section 25A, and 30% standard deduction is allowed on that portion. Okay. Negative annual value. Negative annual values means if suppose your taxes paid to local authorities more than your gross annual value, then in case negative annual value shall be considered. If in case of self-occupied property, so maximum loss, maximum negative value shall be 30,000 rupees if it is interest related to the borrowed capital for renewal or repair. If it is for a construction or acquisition of the property, so maximum 2 lakh rupees in case of self-occupied properties. If any other type of properties other than self-occupied property, so there is no limit of loss. It may, you can charge complete interest if it is more than 2 lakh rupees. Okay, so guys, this is our topic number 6.1. So that's all about the income from house property, guys. I hope you are enjoy the session. I tried to explain each and every concept income from house property. If something I am missing, so I am very sorry for that, and we will meet again for more interesting video related to income tax in future. Till then, thank you so much to joining me. Bye bye, have a nice day. Thank you so much.